Hello, ladies and gentlemen. Yeah, okay. This is Alex FS once again. Okay, today we have a new topic that we have to undergo. But before then, we have to go back to yesterday. Yesterday, I talked about what is Forex, the terminologies in Forex, and so on. So, on a series of this video, so we have to start here. This is where we stopped yesterday. Okay, guys, I hope you guys are with me. So, okay, what is the term volatility? Is a statistical measure of numbers of price change from a given currency pair in a given period of time. So when you hear the word volatile, so, I mean you begin to wonder why is a pair volatile? That simply means it's volatile without volatility. A trader you can't trade it because if a pair does not have a volatility, that means the pair might be like maybe it's moving sluggish. So for a trader to trade a particular asset, that means that asset must be volatile. So let's go on. Okay. So today we are heading to a new topic. A new topic. So predicting currency price movement. Everything about predicting moves of forex currency price can never be 100% accurate. Many programmers and mathematicians have developed various logical and mathematical theories. Economists, statisticians have created a lot of fundamental pointers as the determinant to currency price fluctuation and direction. However, the forex market reflects the reaction of humans to both fundamental and technical signs reflected by forex market. Okay, human behavior is erratic and unpredictable. Therefore, there is no mathematical or logical formula that can give a certain prediction on how the forex market will behave. Okay, you can see. Notwithstanding, there's a way by the forex market is notwithstanding, sorry, there's a way by which you have a high probability of what will happen to your price in the forex market using specified trading strategy. Okay, there are two major ways by which forex market predicts what will happen to price in the nearest future. We have the fundamental analysis and the technical analysis. Fundamental analysis focuses on news trading, while technical analysis concentrates on chart reading. It is vital for every trader to understand how both fundamental and technical analysis works. This knowledge will build a good fundamental flexibility skills necessary to cope with the dynamic nature of online forex trading. So the nature of fundamental analysis. Okay. Fundamental analysis is a way of analyzing the forex market using study of economic situation of countries, such factors and government policies to forecast price movements and trends of the current exchange markets. Fundamental analysis includes a number of microeconomics factors like economic growth rates, interest rates, inflation, unemployment levels, and others. Growth rates, interest rates, inflation, unemployment levels, and others. Fundamental analysis is preferred by mid-time to long-time investors, not day traders, who usually exit trade within a very short time. However, the knowledge of fundamental analysis will help a trader in knowing when there will be sharp movements in price as a result of high impact economic changes. There are various micro and political factors that influence changes in foreign exchange currency pairs. Every forex trader must understand how to change in these factors affect markets and how to profit from the changes. There are four types of news you will come across while monitoring fundamentals. High impact news, which has the strongest effect on the foreign exchange market. Medium impact news, which has a medium effect on the price direction. The low impact news, which has a minimal effect on the currency trading market. And non-economic news, which characterized by low volatility periods. In this lesson, we will concentrate on the news that really moves the market. Okay, I hope you guys are with me. Understanding currency pairs. As mentioned earlier, the currency traders trades in forex are traded in pairs. Determining direction of price in a particular currency pair requires the fundamental knowledge of each currency pairs and how economic data can affect them. For instance, Euro USD, which means Euro versus US dollar, should be typical pairs. In this example, Euro, which is the first currency from the left, is base currency. In the second currency, which is USD, in a counter currency or quotes currency. With with the above explanation, if you decide to buy Euro USD, you will be buying the Euro USD, selling the US dollar simultaneously. And if you decide to sell the Euro, it means you are automatically buying the US dollar at the same time. In this lesson, I will explain three types of major currency traded in forex markets, which are US dollar, the British pounds, and euro. Understanding a forex quote. A forex quote is always a two-sided quote consisting of a ask and bid. It has already been mentioned that the ask price is a price at which you can buy a currency, and the bid price is a price at which you can what sell. Therefore, if you see a forex quote Euro USD as 1.3648, it means 1 euro is equal to 1.6348 US dollar. So reading and interpretation of forex news. For instance, if you read an economic data which favor the euro and you are trading euro USD, since euro will be strengthened by economic change, the value of euro will rise against USDT. Consequently, an upward will trend will occur, referring to our example. Okay, on this diagram you can see above the euro USD quoted at 1.3648 rise up to 1.64748. So that is 100 pips increase. A trader has forecast this will buy Euro USD at lower price of 1.3648 and sell the same close the trade at 1.348 3478. Sorry. It is therefore important to note the news coming and add both on the base currency and a counter currency. Please observe the illustration below. You can see euro, you can see the dollar trend, you can see it's uptrend. On the other hand, if a trader discover an economic change that will make the euro weaker while trading euro USD, such trader will sell euro USD and close the trade once the profit target is reached. Trend euro USD equals to downtrend. With the explanation above, we can easily say you buy the strong currency and sell the weaker currency. But there are instances where you may see a clear economic data that show a potential weakness in a currency despite the economic change. Such currency may remain directionless or may have upward instead of downward. This usually happens as a result of more significant economic changes in economic currencies. While observing a high impact news change which favor the euro, there might be another high impact news change occurring on US dollar at the same time favoring the US dollar. Such events usually make the price directional erratic or quiet. Trend trend. It's very important to understand the mechanism of price when there is a greater impact on a currency which overpowers that of other currency. For instance, it is if the euro gains a 30% strength over dollar and the dollar on the other hand gains 50% over the euro, both pair gain strength, but dollar is stronger. Therefore, the trend on euro USD will be downward. Look at the diagram above. Yes, you can see. I hope you guys are with me. After understanding the mechanism of price reaction to news, we also need to examine the kind of currency pair we want to trade. Their, co- their correlation with other pair, average daily range, and type of news that comes on those pair. So you can see this diagram is correlation table. Among the major GBP USD and Euro USD are positively corrected. This means they move almost in the same direction. You can see. If you look at the chart, you see look at USD CHF and USD JPY are also positively corrected, but GDP USD and USD CHF, Euro USD, Euro USD and USD JPY are negatively corrected. That means they go differently. Please see the chart below. You can see 5 pair correction period. Euro USD. Make sure you know this. Euro USD JPY. So Euro USD GDP USD the same direction. USD CHF and same direction. USD JPY and Euro USD opposite direction. You can see that is it. Relevance of correlation in fundamental analysis. Correlation is another technical factor that can confuse a fundamental analyst. If a trader foresee weakness in euro and decide to sell euro USD, and a trader must also observe that is happening in both USD and CHF. Since the euro USD and the USD CHF have a negative correlation, the economic changes in USD dollar and Swiss francs can be dramatic effects on euro USD. You can see sometimes it's like look at the trend. There are a lot of economic news that come from different countries all over the world. You, you only need to concentrate on the news that moves the market most. I have compiled eight of the market moving news, which come up on the US dollar. When these news come up, the effects of their change in the economy. Therefore, we go into details about the news. I will explain a little more about major currency traded in forex. US dollar. The United States dollar is the world main currency. It is universal. It's a universal way of measuring or evaluating their currency and trading on forex market. Euro USD. The euro has a strong international presence, stemming from members of Europe Monetary Union. GBP, Great British Pounds. The Great British Pounds has the currency of reference till the end of the Second World War. Great British Pounds is heavily traded against the euro and the USD. Chef, Swiss francs. This Swiss francs is one of the major currencies. Despite the relative small economy it has, Switzerland has a very close economic relation with Germany. You can see volatility assignments of Euro USD GDP pairs. Average is the kind of the average pips of the currency pair a day. You can see daily range 145 pips. Okay. Details of economic news on US dollar and interpretation. While trading any news, you should know these three concepts usually are highlighting in forex markets. Trading economy calendar, which are the previous data, forecasted data, and the actual. The previous data shows that last economic news released on the subject. The focus is the survey and the interviewed from economists and financial experts. Finally, the actual is the updated data, the latest news which usually cause an immediate change in the forex market. So the determinant of how far the market will move in reaction to news is deviation. Deviation is the context in the frame and the forecasted data and the actual data. If a US dollar data on non-farm payroll exceeded the forecasted data, the effect of this news will be greater than the market will move dramatically. On the other hand, if the forecast is equal to actual, the effect on news will be low. So, in summary, the more surprised the market is, the more reaction of the price to economic range. Economic news moves the market from 40 pips to 100 pips and above, depending on the deviation. It is always preferable to watch out for news with deviation as high as 3.0. meaning the difference between the forecast and actual, such as news item moves the market dramatically. Any price reaction to news should take effect within 20 minutes to 90 minutes after the news release. High impact news creates the greatest move, and that's why I will be explaining 8 of high impact news which come on US dollar below. We have ISM, manufacturing price, PMI, purchasing manager is meaning purchasing managers index. This economy news released monthly by Institute of Supply and Management. It measures the high level of diffusion index based on surveyed purchasing manager in manufacturing industry. It's a leading indicator of economy health. You can see the effects on currency has increased the pit strength of currencies. Time of release. Release monthly on first business day after the month end. That is it. So ISM non-manufacturing PM, that's Purchasing Manager Index. ISM Institute of Supply Management. This is a leading indicator of economic health which measure the level of diffusion index based on surveyed purchasing manager excluding the manufacturing industry. So guys, I don't want this video to be too long. So we will continue on our next series. Okay, thank you. Please subscribe to the channel. It's very important. Share, comment, and like. Thank you, guys.